All right, the most popular question that's doing the rounds in Wall Street these days is that is AI a bubble? Is AI something similar to what the internet bubble was building in 1999? Are we in 1999? And again, no one knows the answer to this, but one thing is for sure: the levels of debt are significantly higher than the numbers back in the late 90s. The numbers overall also are significantly higher in terms of revenue, and companies that are and the expectation of performance also is significantly higher. So it's not an apples to apples comparison, but there are a lot of similarities. Now, if you take an example of a company like Oracle, they just came into and have just made a huge leap into the AI space. They've become a superscaler of sorts and directly competing with the AWS, Google Cloud, and Microsoft Azure, when they were nowhere in this space until a few years ago. So how have they propelled themselves into this space with infrastructure development? They enter into a deal with OpenAI. They have a partnership with Stargate, which is Trump's agenda, or it is the federally backed agenda of investing in America. So Oracle have committed to spend close to about $300 billion, $300 billion with one service provider, OpenAI. And why is it beneficial for OpenAI? Because OpenAI gets all the infrastructure built out. So the agreement is structured in such a way that you build out the infra, and only then will you get the revenue. And OpenAI, with the growth that it's seeing now with its chatbot, is going to certainly be among its important its key players over the years to come. But the challenge with this is that Oracle is already saddled in significant amount of debt. If you look at the debt to equity for Oracle, it's close to about 450%. Compare that to Google or Amazon, which is in the 10 to 15% range of Meta. So the free cash flow that some of these traditional hyperscaler companies that have been generating are significantly higher than Oracle. So if there is going to be an impact, or if there is going to be a slowdown in consumption of some sort, I would argue that Oracle would be more deeply impacted than some of the other superscalers in the market. Now let's look at some of the system integrators. Nebius Group is a system integrator, just like CoreWeave and Supermicro, and they reached a $20 billion deal to invest as an investment from Microsoft. Now, it's a combination of cash flow that's going to be financing this deal for supplying these data centers, and also debt that is secured against the contract. So for whatever reasons, if Microsoft goes with another system integrator or has additional capacity that needs them to exit the contract, Nebius goes under, or at least there's going to be a significant impact to equity holders of Nebius and the growth prospects for the company. So just like one would advise you that do not trade on margin loans from Robinhood and don't buy distressed assets in poor neighborhoods, I would caution you from investing in some of these system integrators and partners that are reliant largely on these large companies. And if there's going to be any pressure in the AI investment space, these companies are going to be sensing it first, and eventually, as the demand supply imbalance shifts to being there being a higher demand, or there being a higher supply, there's going to be pressure overall. So just like Zuck said, for a company like Facebook, few tens of billions of dollars of overspending doesn't really matter. If something is going to go to waste, he's fine doing that because he feels the contrary is much worse off. But that's not true for some of these small players. But the cautionary tale that I would like to give you is that if some of the equity investors in Supermicro or Nebius or Oracle, for that matter, are going to burn their fingers, that will have a domino effect on the overall industry. So tread with caution. There's a lot of companies that are adding tremendous value. There are some companies that have yet to figure out the true potential for AI, and there's a lot of application potential for AI. But let's be a little cautious, and let's not jump in the bandwagon because everyone and their neighbors are making money. All right, that's it for today. See you in the next one. Bye-bye.